So yeah, I'm
Hey Manoj, how are you? Good evening.
I'm good, Mukund. How are you?
Excellent. You were just telling me you had a very good week.
I had very good couple of weeks actually, to be honest, because I expected markets to go down. I did not expect that it will reward me each and every time I would enter the shorts. So I'm happy. I'm still carrying my shorts, but I think I might have to, exit immediately the moment futures open on Sunday. But yeah, I'm happy.
Yeah,
How
no, I,
about you?
I stay out when the markets are choppy.
Oh, okay.
So I've been in cash nearly 80-90% in cash since August 4th.
That's nice.
I take a position, I take a very small position and I get out very quickly. I don't
Mhm.
like shorting because I think inherently I'm biased to go long.
Right.
So I just don't want to risk it.
Which is fine as long as you are able to preserve cash and preserve your capital. That's good.
You got to be sure about what your strategy is. That's all, right? At any given point of time, if you know why you're doing something and what that means, then that's all I stick to. If I like one strategy, I'm going to stick to it till it doesn't work.
Right. Right.
Awesome. So let's quickly go through. We took last week off. Actually, it was because I was traveling. I was in New York. It was my daughter's birthday. So I took the time off
Oh, that's nice.
Friday and I was flying back. And then Saturday, you got busy. Sunday, I got busy. But we're back. Hopefully, everybody here is excited to go through it again. There were no big earnings, Manoj, this week. I was
Right.
watching, and there's nothing for next week as well. I mean, we are ending the month, ending the quarter, September.
Right.
So, for another 2 weeks, I would say it'll be light. I would expect something reasonable to start only with bank earnings in the early part of October, right?
Right.
Wasn't watching. I was very cautious, as I had mentioned to you. And there's an old song, right? Wake me up when September ends.
Yeah, right.
Yeah.
That's
So
right.
I'm like, okay, September is ending. I'm gonna get up again.
Right.
Okay, so overall macroeconomics, just start with macro first. Core PC inflation was, reasonably good number print this morning. I saw the Nasdaq went up significantly, almost up about 2% to 2 points,
Right.
2 percentage points up, and then gave up most of the gains, if not all of the gains, ending up
Yep.
nearly flat for the day and for
Yep.
the
Yep.
week as well. It was mostly flat, right?
Yep.
And then GDP growth rate revision for a couple of quarters out was also reasonable. So I think it was okay. But let's go through all of the indices first, SPY, QQQ, DIA, and then see where we are with most of them. But I'm going to turn it to you.
Okay. Yeah, so I'll start with the weekly chart first, and then we go to the daily and the hourly to conclude where exactly we are. Okay, so I just had last week, I had some change of perspective in terms of if markets are giving me some other clue whether it wants to do something else. So all of a sudden I stumbled upon this chart, which was, I think I saw on your timeline, or maybe somebody else's, where it showed that there is a cup and handle shoulder, cup and handle shoulder, pattern firming. Uh, when I drew it, I was like, okay, it's almost a cup and handle shoulder, unless and until this handle breaks down. So I actually tweeted as well last week that if we don't hold up somewhere here, then this pattern gets invalidated, because normally handle does not retrace more than 21% of the entire cup. It
More
just
than 1%?
21%.
21%. Okay.
Yes, normally maximum at the in one of those rarest of cases it will go to 38%, but normally it doesn't go to 38%. Normally goes to 21% and then starts running back again. This handle, which the way this handle is formed, is exactly the shape that normally a handle should be. It's a typical textbook cup and handle pattern, which should actually result into a big breakout, which would give us a target of 5,400 if it has to do exactly what cup and handle are supposed to do. I'm really not sure if markets are about to go so long, because there are certain bullish voices that I've seen over FinTwit in the last couple of weeks. I'm really not sure if it is going to do that. As of now, I'm carrying my shorts. I'm shorts into NASDAQ as well as S&P 500 futures, of course. But this thing something gives me warnings, and there are two reasons why it might happen. One, of course, this pattern itself. Another, the 50 weeks EMA, where it has been holding up for last week. Another reason being this demand zone of 42.25, 42.78. It might come down again, maybe to test the 50 EMA and then give us a bounce. I don't know. But as of now, this pattern is holding up. This is weekly. Now let's go back to the daily chart. daily, again, inside this particular handle channel pattern. And if you see the candle, these candles are not very big red, not very big green. So I would be calling it as a consolidation phase before the market decides to do what it wants to do in the next maybe week or two. Again, it has been holding up above the 200 EMA as well. So the signs are there that markets wants to take a breather here and then decide whether it wants to go up or whether it wants to go down.
Yeah.
So I would not be very bullish. I would not be very bearish. I would be very cautious in any position that I'm carrying. The reason I carried my short is because of this. There was a channel breakdown here, and this is where exactly I have entered my short. I'm still holding my short, and it is just above. I mean, just in the money. It's not very big in the money, but it is in the money. I'm hoping it will go somewhere around here, maybe around. Give me just 1 second. Okay, maybe around 4,300, something like that, and then it tries to give us a bounce, and then I will see whether I want to exit or whether I want to carry my shorts. But let's see. I mean, this is not something a very huge bearish scenario that I'm looking forward to, but maybe somewhere around 4,300, 4,280, and then we will see whether it wants to go down or whether it wants to go up. So this is SPY or ES.
Yeah. No, I think when I looked at it overall, the cup and handle when I shared with it was about almost a week, little more than a week ago. But I haven't played it because I don't like choppy markets.
Right.
You have to be very quick on your feet, and you've got to be able to you have to be very fluid. That's what I mean. You've got to be sure that, okay, if the sentiment changes in the morning, by half an hour, you need to be able to change it. I don't enjoy that. I don't like watching the screen all the time.
Right. Okay. So there is a way to play this kind of scenarios. If I have to play it on a daily chart, I would say that markets will not touch this lower end of the channel anymore. If it touches, which means it is actually trying to give up on the 2-3 things. One, it is trying to give up on the demand zone. Second, it is trying to give up on the 200 EMA, and third, it is trying to give up on the 50 weeks EMA as well. So my bet, if I have to be bullish, the most important thing that the market should be doing is should not be touching the lower end of the channel in the next couple of weeks. If it does that, chances of the first two signs being in place for this pattern to play out are in place. First, of course, it is taking support from the supports, all the support areas. Secondly, it is not touching the lower end of the zone, which means it is trying towards the upper end. Third would be, of course, it is trying to target the EMAs, 20 and 50 both. If it is able to cross past both the EMAs in the next couple of weeks, that's my third signal. And the fourth would be, of course, the breakout. The breakout is somewhere around 4,500. That's like still more than 200 points from here. But for us to carry those 200 points and carry the burden of bulls all the way, I don't know it's easy, because of course markets have been very choppy. Macros are not supporting it, but we are entering into earnings season. Earnings can surprise us anytime. So we don't know whether it's going to happen or not, but seems to be happening as of now. Let's see what happens in the future.
Yeah. No, and I looked at the weekly chart even on the Dow. About 2 weeks ago, I was a little bit more bullish about the Dow than the NASDAQ, which looked the weakest of the lot. But NASDAQ and SPY seem very similar. The Dow and IWM are a little bit more different. I mean, IWM was the weakest, right? If you look at all of them, Russell 2000, I don't know why anybody should be touching it, but we'll see as it goes.
True. So this is NASDAQ, as course, as you said, it's similar to what SPY has been doing. Similar cup and handle. Handle is a little different. I may have not drawn the exact handle. Let me see if it forms. No, it's not exactly the same way, the channel or the flag. But as long as it is consolidating within those 21% range, it's fine. It does not need to have the exact channel kind of formation. It can be a consolidation. It can be like this as well, wherein it forms like this. Absolutely perfect as long as it is in a base formation wherein it gives you a consolidation, it gives you power to gather your power and then gives a burst. Everything is possible. That's completely okay. So I don't know if it's doing that. Given the weekly candle, it's doji, so it's neither bullish nor bearish. So you don't know what's happening in the future, but as of now, again, I'm carrying my shorts. Why am I carrying my shorts? Here is the reason. Greystone doji, which is the bearish daily candle, and on the hourly, It is inside this particular thing, and which is trying to break down. But again, it has broken out of this channel, and yet I am carrying my short. So I don't know whether it's going to reward me or not, because this is actually a back test of this particular channel. This channel has broken out and then back tested and still above this channel. So I don't know if it's I would be rewarded. So let's see on Sunday morning when markets open.
Yeah. Okay, how are we doing on the Dow?
Yep, here we are. Let me start with the weekly chart. Okay. Oh, where are my trend lines here? I'm sorry. Just 1 second. That's the monthly. Okay, this one is here. Okay.
You got like a million trend lines going.
You have to watch each and everything where markets are respecting something and not respecting something else. So you have to just watch and see whether which is working and which is not working, right? Different time frames have different trend lines too. So markets are rewarding weekly and markets are not rewarding the daily or the hourly. So you have to be really, really careful on what's happening and what's not happening. So on the weekly time frame, this is what it is showing. This one is actually a daily channel which has already been broken down. So here you see that it has already broken down on this particular channel. It is coming down towards this resistance, or which was earlier resistance, broken out, back tested, and then rallied all the way. It would be back tested somewhere here, and that is exactly where the lower end of this weekly channel comes into play. So I would be watching this trend line far more closely. This red trend line is far more closely in terms of the daily time frame and not the weekly time frame. This is where I would be more cautious if I'm carrying short. And if I was bullish, definitely I would have exited here. If I was bullish, I wouldn't be carrying any of my longs somewhere here. So I am actually not short, neither short nor long on the Dow Jones. I am short on the NASDAQ as well as the ES, which is SPY. I'll be watching this very closely because, as I said, SPY and QQQ both are showing bullish signals, or rather not bullish, then definitely not bearish as well. So if markets are carried on the lower end of this particular trend line toward this, I would watch for this as well, along with the lower end of this channel. If market wants to bounce back, this is where the area should be. And again, as I said many times in the past as well, many times markets break down of the 200 EMS and only to go back and bounce back quickly. So this is already broken down. Maybe it will come down here and then again bounces back quickly. So this area should be very clearly watched for Dow Jones.
Yeah.
Okay. Here is a very critical juncture on the Russell 2000 index. We have broken down on multiple things. One is a key support, which was here. This particular area, which was broken out sometime here, which was June, broken out, rallied all the way towards the supply zone. We came back down, and then this is where we have actually entered below this particular support, which was here, this black line. This black line is exactly we have entered below it, and we have also broken down on the 200 weeks EMA. Another key interesting point, this channel, which was holding up for almost last 4 years, it has almost broken down of it. I would still not call it as convincing breakdown because we are just holding around this particular trend line, and this is exactly the under this as well. So again, neither bullish nor bearish. I would not be bullish. I would not be bearish. I would wait for the next couple of weeks for markets to give me exactly clear signal of what it wants to do, because it has already fallen so much from the 2000 levels all the way towards 1798, which is 1800. Key supports all around, the resistances all around. So I don't know what market wants to do in Russell. So I would not be bullish. I would not be bearish. I would just hold and see let market decide what it wants to do in the next couple of weeks. Definitely, it won't be solved easily in the next 1 week or so, next few days or so. It will take some time. Definitely 2 weeks is what I see.
Yeah, I don't see it resolving actually until the end of the year.
Wow.
Yeah, I don't see it resolving. I think Listen, I overall, when you look at the macro, which is now to a certain extent going to be driven by consumer sentiment and a combination of spend, the consumer is extremely strong for the last 6 months to about the last 1 year.
Right.
And with the combination of potentially a government shutdown this weekend, student loans are coming back pretty big in terms of payments from October. And then you look at the overall sentiment that consumer sentiment overall, which the Michigan index provides, I see a lot of credit card balances are going to get paid off.
Right.
And this is traditionally a strong quarter for retailers, right? This is the Black Thanksgiving and Christmas season. Yeah, I don't see any reason why stocks should go up significantly between now and the end of the year, although traditionally Q4 has been a strong close.
Right.
Maybe now this,
let's go to the 10-year chart and see what it is showing. Okay, let me go to the daily chart before going to the weekly chart.
This is a 10-year bond?
Yeah, 10-year yield.
Yield. This is not
yield,
the
10-year yield.
This is not the price of the bond.
Yeah, this is
down ridiculously high, low.
Absolutely, yeah. Looks to be topping out, but again, I'm not sure if it wants to top out, because somewhere here, which was 4.34, it did give us a sign that it wants to give a double top. It gave a double top, retraced all the way to 50 EMA, and then bounced back sharply. So I don't know whether it wants to go back all the way towards, maybe down to a lower end of the channel, whether it wants to go up, I don't know. And there is a reason why I am bringing this monthly chart up. So as I have been saying in the past as well, that markets does respect divergences, especially on the higher time frame, weeklies as well as monthly. Overbought somewhere around September 2022, and yet we are making new high. RSI overbought, right? It was somewhere around, let me tell you where it was. It was 77. Yield was 4.35, 4.33, corrected, and then rallied all the way again towards 4.57. But RSI is not making a new high, which is a negative divergence. This kind of divergences normally result into a big drawback into any kind of underlying that we are talking about, the stock or a feature or a yield. So I wouldn't be surprised if sometime in the next 2, 3, or 4 months, yields come back down, falling towards maybe 3.5 or 3.2 kind of a thing. Whether it happens in the next month or 2 months or 3 months or 6 months, I don't know. But usually it takes at least 6 to 12 candles to come back down. When you say 6 to 12 candles, which means 6 to 12 months, again, very long time for us when we track markets on a daily basis. So this is a monthly candle. So chances of rates, yields topping out at least temporarily in the next 6 to 12 months are there. Whether it wants to do that or not is something that we have to see, because many times we have seen in case of NVIDIA itself, when it had given us that overbought signal, it had given us those negative divergences. One earning and everything changed. Similarly, one macro scenario, which is maybe completely hyperinflationary or something else, scenario might change, and we might enter into another overbought kind of a scenario wherein it goes up. So we don't know. As of now, it does look like.
Hey Manoj, I have a question for you.
Tell me.
Let's assume that the trend line, actually put up TNT, put up the chart TNT.
TLT or TNT?
TNT, yeah.
Titra.
No, the one TNT, I think is the, oh
is
no.
Is it bond ETF you're talking about?
I think I got it wrong. No wonder. Okay, yeah, go to the TNT. Go to the Tintra. Yeah, that's okay.
Okay.
Okay, go to the weekly chart.
Okay.
All right. Now, what I did was actually let me share my graph.
Okay.
Can you see it?
It's coming up.
Okay, all right.
Yeah.
If I look at it from I just drew a simple 2 trend lines, okay? This one from here, touching this, going down. This one from here to here. So this is almost flat. And this one is going down. What is this kind of a pattern? It looks
so this is definitely not descending triangle. I wouldn't call it as a flat. So flat is usually very flat. This is
what kind of a pattern is this?
This is the falling wedge.
A falling wedge.
Yes.
It becomes more clearer on the weekly, right?
Yeah,
So
more clear on the
falling
weekly and the
wedge,
daily.
is the
So,
falling
so,
wedge
so
bullish or
both the
bearish?
both the pattern, whether you are talking about falling wedge or descending triangle. Descending triangle is a bullish, sorry, bearish, and falling wedge is bullish. Falling wedge, stops making, so it converges, and after some point it just boom breaks out. And descending triangle, it converges and then it breaks down. So completely different scenarios.
Differentiate between descending triangle and falling wedge.
Yes, completely different, opposite to each other.
Okay, so descending triangle will be like this.
So descending triangle is basically the flat line, and then or downward line coming from upside. The falling wedge would be like this. So both are falling towards the lower end, but one is very sharp, one another is a little shallow.
Got it. Whereas if this was like this as a straight line, then that would be
a descending triangle.
Got it. Okay, good. Always good to learn.
Absolutely.
Okay, there are a couple of stocks that you wanted to go through today, right? Google and JPM.
Yes. Let me show you those two.
Why do you like those charts?
I'll explain in this particular graph. The reason I'm liking these two stocks is basically I'm bearish on both the stocks. This is JP Morgan.
Google.
It has broken down of this rising wedge.
You have to share your screen.
Oh, I'm sorry. I'm sorry. I thought my screen is already shared.
It was, and then I shared my screen.
Oh, yeah. Yeah, right. Is it visible now?
Yep.
Okay. So this is the daily chart of JP Morgan. I have been talking about this stock for almost 3-4 months now because of this pattern, which is rising wedge. Sorry, megaphone. Megaphone has been forming for last how many years? I think more than 10 years. Sometime here is when I had tweeted, not here, maybe somewhere around here is when I had tweeted last year, December or January. And after that, it was continuously rising in this rising wedge, which is on the daily far more clearly. And then it broke down, went back again into the channel, into the wedge, dilly-dallied around to 20 and 50 MA, and then broke down, and then again back tested. And today's close is big red candle. Today's red candle is very big. It's a bearish engulfing candle and very bearish. If you look at the weekly,
that red candle is really bad.
Yeah, and weekly is based on doji. So weekly bearish, daily bearish, and it has already broken down of the rising wedge. The only thing which might still, not break down big time is this pattern, which is basically a low base. Low bases normally do take some time to break down. So if it takes maybe at least 2-3 more weeks, then somewhere around this, it will also coincide with the 200 EMA as well. I don't know if it wants to do that, but this week's close and today's close is very bearish for JPM. So I have carried my shorts in JPM. I would watch this particular box, which is low base, very closely. If it breaks down on this particular thing, then chances are it would actually close somewhere around 200 EMA, which is 140, 141. And that's where I would look to book out maybe. But as of now, it's bearish. Okay. Next, Google. Very similar. The difference is it has not dilly-dallied around 2050 AM. It has not dilly-dallied around the back test. It has broken down last week and then back tested and then rejected very big time. This red candle is definitely bearish. It has rejected from the back test. It has rejected from the 20 EMA as well. And weekly is not very bearish, but again, not bullish as well. So I am holding my shorts on the Google as well as JP Morgan. Both based on two things, of course, breakdown of the rising wedge and backtest rejection. Both the things are bearish for both the stocks.
Got it. Okay. I had a few that I was watching. One is Williams Sonoma, WSM.
Here we go.
Yeah. I spoke about it last week. I like it overall. What do you think?
Stock looks good. It has been continuously rising inside this channel. It has broken out of this particular triangle. So if you look at this, it has broken out of this triangle long time ago, sometime in June
Yeah.
And then it has been consistently running in this particular channel. And there doesn't seem to be any supply zones. I mean, there is this supply somewhere around here, which is it has already
Who's
crossed
that?
past. Next supply comes somewhere around 170 or something like that. So as long as it maintains this run rate of in this channel, the stock is safe.
That was the first one. The second one I really like is Akamai.
Okay.
AKAM is the ticker symbol. Formed a bull flag on the weekly, sorry.
Okay. I think you had shared this stock with me sometime back as well, and this is a monthly chart. Has been consistently rising inside this channel for a very, very, very long time, for 15, 16 years now.
Yeah.
18 years. 18 years. Wow.
Steady.
Steady, definitely steady. Of course, it had this big red candle somewhere around 2000 because that was a dot-com bubble. And I have no idea what the stock does. You might be knowing it better. But looks like safe inside this channel. And again, rising inside this another channel within the channel of monthly candle.
Right. And then a bull flag.
Okay. Now, okay. Here is something that I would like to say. As I have been saying, that when a stock is moving in that channel, and there the first instance that I normally watch is when it stops hitting the channel. So it has made a new high, but it has not touched the upper end of the channel. That is my first sign to be cautious. I am still carrying my long if I am carrying. Another sign is it is making negative divergence here on the RSI as well. So two signs. The stock made new high, but RSI did not make a new high. So negative divergence did not touch the upper end of the channel. So two signals that the stock may give us some correction in the next couple of weeks, maybe. This is what it looks like.
And then the last one is Rivian.
Here we are. I think we spoke about this stock 2-3 weeks ago. It reacted, I think this is the time when we had actually spoken about this stock.
Right.
It went all the way towards the supply zone, reacted, and then it has been taking the support from the 20, 50, and 200 EMAs. It's a sign that the stock does not want to stop here. It has broken out of this particular trend line from 2022. After breakout, it rallied all the way towards the supply zone. If supply zone was very bearish, it should have given back all the gains from 20, 50 EMAs, and it should have come back all the way here. It did not do that. It took support somewhere around here from this small demand zone, which is a very small demand zone. That's a very healthy sign. Stocks like this tell you something that, this supply zone definitely would be crossed past. And give me 1 second. Why is this coming up now? Okay. And it has 50 weeks EMA just right around here. And hovering between 50 and 20 EMA and just under the supply zone, a sign that the stock does not want to stop somewhere here, and maybe it wants to go back to 40 kind of a level, maybe. Looks like. So as of now, definitely the stock does not look bearish.
And also on the fundamental side, right, they actually are going to increase their production for the end of the year numbers.
Oh,
so
okay.
fundamentals also are pretty strong for this stock.
That's nice. And this is one of the highly followed stock on FinTwit as well. So our viewers definitely will like it.
Awesome. Thank you so much, Manoj. This was a great day. I'm glad we got connected back again and get started. Please subscribe to the channel. Manoj and I will be back again next week. Thank you all for following. Thank you, Manoj. Have a good weekend.
Thank you. Thank you, everyone. Do subscribe. Bye-bye. Take care.